Hello traders, and welcome to another weekend's market forecast video. In this video we are going to have a look at what we can expect in the week ahead in terms of the market, as you usually know, and we will explain also why this next week could be a choppy week across the several markets. So last week we have explained that the dollar index from this area was expected to react lower with another possible high. This is what we have got, and at the moment we are going to see some more choppy structure right here, and eventually the market should be turning to the downside before anything else takes place. So we are still biased to the downside overall in terms of the dollar in the bigger picture at this stage. For a reaction at least to the downside getting started anytime within the next couple of days. So this will be the area over here that we can expect the reaction up to the 106 area will be the one that should determine the next move to the downside, and we are going to have a look now the rest of the market and explain why it could also be a slower week, because we had some volatility over the last 2 weeks and the markets could be a little bit calmer within the week until we enter the new month of July. For the dollar again, we have broken above these highs over here. As we have been explaining last week, the market was still not clear for us, and this is why we didn't trade it or recommend anything. So we were overall in this bouncing price action over here. We have now got the confirmation of a push to the upside. We are very close to break above the highs from 29th of April because obviously, as you know, the Japanese yen is one of the weakest currencies in the last couple of years at the moment, and it's still trending to the upside, which it doesn't show any signs of slowing down for the time being. And what we can see for the next week is a possible continuation higher a little bit more, then a reaction to the downside, and then another reaction to the upside. Something like this could be expected. But still, for us, this is not a valid trade setup for the members. If you are not a member yet, you are missing a lot of information we provide and trade recommendations. And we do not like to trade when a market is in the middle of another structure and is not giving us a proper risk to reward ratio for a good swing trade. This is our style, and this is why we are unique, and this is why we are obviously in this service, and all of our members are actually on the right side of the market for the bigger moves, and we don't like to day trade. As you know, 90% plus of day traders, they lose money in the long run. So for the dollar again, this is what we can expect: a little bit more upside reaction and then possibly another continuation. We need to see what happens within the next couple of weeks in this one, but from what I see, we are heading towards a choppy, let's say, market scenario. We can keep trading to the upside in a small scale. For example, we might be looking at something like that for the next couple of weeks, nothing major. And then at some moment, we will break to the downside for a correction at least. For the euro dollar, this is what we have. We expected the market to react from here to the upside, then provide a pullback before it continues to the upside. As of right now, this is what seems to be the structure. We should be expecting a small accumulation within the beginning of this week, and then we should start seeing a turn to the upside for at least this move for the moment. And we are still biased for the upside for the euro dollar as of now. For the pound dollar, similar to the euro dollar, we will expect to see a reaction to the upside in terms of the next week or so. So we are going to create here a possible pivot point anytime within the week, and then we will start turning to the upside. Small possibility, it's likely to see another small spike to the downside, and then we should still push to the upside. This is the alternative scenario. So overall from here, we are only looking for possible buy scenarios for a reaction to the upside, at least up to here for the short term in the pound. For the pound yen, we have officially a new high above this one and this one. So the market over here, it looks like it's accelerating higher. So we are expecting to see more upside to continue in this one. Higher, small pullback, and then continuation higher can be expected. So this is not a market that you should be looking to sell at this point, with higher prices to be following. The only thing is there are not any valid, I would say, or good risk to reward ratio trade setups to buy this one at this point. If somebody bought from here, that was a good level. For now, the market can keep trading to the upside, as I explained before, like the dollar yen. So something like this should be taking place before we get a reaction to the downside sometime in the next couple of weeks. For the moment, it doesn't seem at all ready to turn to the downside, and it should continue higher with small minor pullbacks to find support at this point. For the EURUSD, as we have been saying for a long time, we expected more downside. Last week we explained the same. The market was somewhere right here, and we have said that after a small bounce we should continue lower, and this is exactly what the market has been doing overall. We can still see a possible bounce, but ideally we need to see another move to the downside to reach another Fibonacci extension area or somewhere near, and from there we might soon enter into a stage of consolidation before we create the next move. So at this stage we wouldn't recommend trading it at all. This was a great value sell market from these highs over here. We have keep explaining this on every weekend's market overview video. Also, for our members on the daily live sessions, again, we are sharing information you guys are missing, and many things we will never disclose for free on YouTube because they hold massive amounts of value, and something that 95% of the analysts and traders out there, they don't know. So if you want to get the good information and value and how to trade properly, consider checking us out with the links in the description. Through Buy Me a Coffee page. This is where we have the membership. If you have any questions, send us an email at support@riforecast.com and we'll get back to you within the day. So more downside as of now for the EURUSD, and we wouldn't like to trade it at this point. We already forecasted, I would say, from these levels of 167 down to 160. This is 700 pips. So for us, this is a decent move overall, decent setups in between, and we are anticipating to see a reaction soon. We have officially broken below January's low over here, as we have been expecting, and we can see more downside for the time being before we see a reaction. For gold, as we have been expecting from here the market to turn to the upside, this is exactly what we had, with 3 lower highs and an acceleration to the upside. Of course, on Friday there was a reaction to the downside, which it was also expected, and from here we can expect the market to provide us with some sort of an ending structure and acceleration to the upside to continue again. And ideally we need to break above the highs from 21st of June on Friday and the highs from 7th of June, and then we will see where we go. But overall we are still bullish for gold, and we might see new all-time highs within the next month or so. So we are only interested in looking for possible buy opportunities. Ideally the market should have been bought from here from this move and from here for this move. For the time being, we will see how this one will play out in the beginning of the week, and we will update our members in the live sessions that we do Monday to Thursday. For oil, we have got this bounce from the 4th of June over here, corrective bounce to correct this cycle, this decline from 5th of April to 4th of June. And ideally, we are expecting to see a reaction to the downside within this week, something like this. And based on the reaction, we will see later if the market is ready to give us new lows from now, or whether we could see a reaction for another move higher before we break down later on. That's another scenario here in the blue path, but we will see what it wants to do before we can see clearly what it wants. But at the end of the day, this market remains bearish in the bigger picture, and we are not interested in any buy setups for oil. Now for Bitcoin we have got a choppy corrective ending structure over the last week. This is what it appears to be as of now. Something similar in this one we had from March into May, the beginning of May, but this one obviously it's in a smaller scale because we have less volatility right now versus the one we had over here. So for us, this is an ending structure for a breakout to the upside and ideally to head to new all-time highs. Of course, there is another possible scenario in the short term for Bitcoin, but this is something we explained to the members. So overall, we are still biased to the upside for Bitcoin for the time being, and ideally within the week we would break this ending structure and start an accumulation phase for the next move to the upside. This is what we are expecting overall. If this one fails and it breaks, then we might have another structure forming down here before we head to the upside. So all of the scenarios so far bullish for Bitcoin. This is the conclusion that we have. Indices, the SPX, S&P 500 cash index, as you have seen, we have forecasted this move on the spot, I would say, and we can still see a possible one more high coming here, something like this, before we get some consolidation or a reaction lower. This is expected to be a corrective structure for another move to the upside later on for the moment. But for us, this is a market that it's not worth chasing higher at this point, and we would rather sit on the sidelines and wait for more definition and for a better possible buy scenario if the market decides to provide us with a longer pullback for a better price entry. But regardless of the case, we are expecting to see some pullbacks, maybe another high, and then we can get this pullback to fill this gap over here before we move to the upside one more time, before we see another reaction later on. So the market is expected to be in a smaller range for this time into the next month. Is still going to be supported, but we can see some choppiness coming soon in these indices, and for us at the moment they have no value in trading. They have already provided in the last I would say 2 months or so, they have provided this move and then this move. So if you didn't buy from here or from here, you are doing something wrong. And then if you want us to help you out, you can consider becoming a member with the link in the description. So for us, the indices right now, the American indices, will not be suitable for trading. We need to see some more data and definition in their cycles to find out a better value trade setup at this point, I would say. Obviously, concluding with our ETFs, the 3Qs and the GDX for this weekend's market forecast video. We have got also the move to the upside like we saw in the SPX, and from here what we can expect, it's possibly another move higher, is not necessarily needed, but this is what we can see, at least a small push to the upside. Whether a new high or not, this is irrelevant. This is not a trade. If you are trading this move, you are doing something wrong, because you are essentially gambling whether the market will do another high or a small bounce and then pull back. So for this reason, we do not really like trading the 3Qs at the moment, as well as the indices, because soon we should see something like this for a pullback before we do another move to the upside. And this pullback can also develop into a bigger and more complex pullback later down the line. So for the moment, we want to see what the market wants to do before we can or could identify any other trade setups. And concluding the session with the GDX, the gold miners ETF, we have been expecting after this level over here to start seeing the next cycle higher, I would say. So we have already extended with the first move here. We are seeing a small pullback over here, which soon is going to find support and continue to the upside, and this should support gold as well in this scenario. And we are expecting this one to ideally reach 39 to 40 area before we see another reaction. So this will be the bias as well for the GDX ETF. So hopefully you have enjoyed another weekend's market forecast video. It was a little bit later upload this weekend because we have been away for a couple of days. So hopefully you have enjoyed. Leave us a like and remember to subscribe and turn on your notifications so you are always going to get notified when we upload a new video. We should see you probably sometime between Wednesday and Thursday. We are going to be uploading a midweek video, and then obviously again, as we usually do, on Sundays with another weekend's market forecast video. So thank you so much for watching. Enjoy the rest of your week. Have a good week ahead and good trading as well. And don't forget that if you're struggling with your trading or you don't have proper analysis and you want us to help you out, we do have a member area. The link is in the description. If you are serious about trading, you should go directly with the premium plan. We host daily live sessions 4 times a week, Monday to Thursday. Even if you cannot attend all of them, you are receiving the recorded session always. You can watch it whenever you want. You can come back to us with any questions as well at support@roiforecast.com, and we are happy to help you become successful trader or investor. And we'll see you in the next video. Take care.